Hi friends, now we are going to discuss one circular on liquidated damages or any amount collected for breach or non-performance of contract. So up to August 2022, until the time this circular has been provided, we were interpreting that any amount that is collected for breach of a contract so will be called as consideration for tolerating an act and that will be chargeable to GST. So that was the clarity or that was the interpretation which many people were following. Finally, this big circular has been provided in the year 2022 August, and this has completely modified the interpretation what people were having until that point of time. So first, we need to understand, so what is this liquidated damages is all about. First, a person enters into contract with another person, and whenever there is a non-performance of the contract or breach of contract, so as per contract when performance is required, so upon non-performance of contract or breach of contract, so some amount will be collected or will be given by one person to the other person, so in order to compensate the loss or the injury or the damage caused to that person. So this is what is called as liquidated damages, and it is clearly given in Contract Act, and section 73 of Contract Act 1972 says that when a contract has been broken, the party which suffers such breach is entitled to receive from the other party compensation for any loss or damage caused to him by such breach. And another general meaning of liquidated damages is like it's a cash compensation agreed to be signed or written contract for breach of contract payable to the aggrieved party. So it's a cash compensation payable to the aggrieved party. Now, so this is the meaning of liquidated damages. So whether this compensation, whatever is being collected, will be treated as consideration first of all. So, and will it become supply? So that's our next issue of discussion. So the first issue is what is the meaning of liquidated damages that we understood. So liquidated damages means what as per contract act, as per general meaning. The next aspect is it consideration? Generally, liquidated damages is consideration or not depends upon whether that money collected is merely to compensate the loss. Merely to compensate the loss, and it is not an independent activity. Okay, it's not an independent activity, because it's like, suppose I am tolerating your act, this is your act which I am tolerating, for which you have to pay this much charges, like that if it is given, then only it will be consideration. Suppose if it is a mere compensation for loss or breach or injury, that is not treated as consideration. That's what they are telling in the circular. So how that money should be? So the person who enters into contract should specify, say, you are not going to pay this on time. So if you delay this, I'm going to collect some late fees from you, like that. Or suppose if you are taking a loan from me and I'm going to, accept if you pre-close. So that should be there. Upon receipt of that money, the person should have accepted that. So then only it will be called as tolerating an act or consideration for tolerating an act. So because mere receipt of compensation will not restitute that person anything. So then it is just to compensate his loss or just to compensate his injury, then it will never be called as consideration. So how the money received should be? The money received should be for a object. What is that object? That is, I am receiving some money because I am only telling you that if you do this much charges you need to pay, so that I will regularize it. So in the general commercial terms, it should be specified. So that's what, like pre-closure charges or like some charges for cancellation. So these kind of charges, whatever is collected, that will only be treated as consideration. As such, not all liquidated damages will be treated as consideration. So that is only provided in the circular mainly. Okay, then so liquidated damages, whether it will be treated as consideration or not, depends. Mere compensation to compensate the loss or damage or injury, not treated as consideration. Okay, otherwise, so specifically expressly provided in the contract, then it will be treated as consideration. Okay, now the next aspect that we need to see is, will it become supply? Yes, if there is a consideration and for which the activity is what? So there is no activity, is just the consideration. They are mentioning in the contract that if you are doing this, like if you are making payment late, it's okay if you pay the late charges, like that. So then what is its taxability? How we need to understand? Is it supply? Yes, it is supply, but we should not treat it as again an independent supply. So this will be treated as an ancillary supply to the principal supply. So now they are bringing the concept of composite supply here. What they are telling is that any consideration that is liquidated damages treated as consideration will be as per the contract. So now there will be one principal supply. If the principal supply is taxable, then this charges collected on account of breach is also taxable. For example, you take railway tickets. In case of railway tickets, so usually sleeper class and second class sitting, etc., those tickets will be not taxable, exempted. Reason being, in case of railways, only AC will be taxable, and that too first class will be taxable, AC or non-AC. AC, all classes will be taxable. So for that cancellation, if there is any cancellation charges collected, so then it would be chargeable to GST. Whereas for normal second class sleeper tickets, if there is cancellation, and for that if cancellation charges are collected, those cancellation charges are not taxable because it depends upon the principal supply. So previously we were interpreting it as standalone supply, but they are telling no, don't see it as a standalone supply, see it as an ancillary supply which is part of a principal supply. So that is only being provided in the circular, the next aspect. Okay, then now therefore what is that we need to understand? The conclusion from this discussion is that first we need to see any amount received or liquidated damages received on account of breach of contract or non-performance of the contract. That is divided into two. The first thing, it is mere compensation. It is mere compensation in order to compensate the loss incurred by a person. It is mere compensation in order to compensate the person who incurred the loss or damage or injury. Then not treated as consideration, and therefore it is not taxable. Suppose if it is specified in the contract that upon this happens, you need to pay these charges, like that clearly it is specified in the contract, then we need to see again whether those charges are like penalizing a person or those charges are collected in order to discourage such act or situation. So that's the second, that is specified in the contract. Even if it is specified in the contract, why are they collecting it? So they are collecting it so that this kind of situation should not repeat. So then it will not be treated as consideration. For example, check dishonor charges. This check dishonor charges, if you see, check dishonor charges are mainly to discourage a person from doing it. Even though there is a contract, all those things are there, but that will not regularize the transaction. That will not regularize the transaction. So they are telling in order to discourage a person from doing that, they are collecting. So therefore it will not be treated as consideration and not taxable. Suppose if it is other cases, what are other cases other than this? Not to discourage a person, it's okay to regularize the transaction. You pay it and still you will be able to get that services. So then it will be treated as consideration and its taxability depends upon principal supply. Okay, so this is the summary chart, what you need to keep in your mind. Continuation to this circular, they have given different situations, different scenarios. So whatever we have seen so far is given in the circular. Apart from that, few examples are also given. In that, one by one, we are trying to understand. The first scenario that have been mentioned is about compensation for cancellation of coal blocks. So in the year 2015, so this coal block scam has happened. Like many coal blocks were allocated by the government to various parties, and Supreme Court gave an order that all these allocations are irregular, so are not proper, just like the 2G scam kind of. So this coal block allocation scam has happened. So therefore, Supreme Court said that no, whatever blocks that are allocated needs to be taken back by the government, and if government wants to pay the compensation, they can pay the compensation to those parties. So that's how they have made the law. So now, in that case, that is, it's a Supreme Court order. Because of the Supreme Court order, what has happened to those people to whom the coal blocks were allocated, they have returned that rights to the government, for which government has given some compensation. Is this compensation treated as consideration? No, because nowhere it is mentioned in the contract or agreement that the person to whom coal block is allocated, upon cancellation of allocation by the Supreme Court or any other case, they have to return it, and for which government will give this much of compensation, is nowhere mentioned. Moreover, it is not like an option for them there. They have to mandatorily adhere to the Supreme Court law. So this is mere compensation to compensate the loss or injury or damage to that person. So therefore, this will not be treated as consideration, and consequently, it will not be taxable. The next situation is about dishonor charges, check dishonor charges, or check dishonor fine, or check dishonor penalty, anyway we can call it as. So this check dishonor charges, what about its taxability? Even though it is mentioned clearly between the account holder and the bank that, so whenever you dishonor the check, you have to pay these charges. But these check dishonor charges will not regularize the transaction, and this is to discourage a person. This is like a penalizing a person or discourage a person from doing that in future. Again, this will not be treated as consideration, and it will not be taxable. The third scenario is about traffic fines. When the traffic fines are being collected from the people who violate the traffic laws, now it may be specified in the contract, that is, there is no contract as such. So this is like, again, so for what purpose they are collecting? So in order to discourage a person. So here there is no loss, compensation, all these things. So here it is mainly to penalize a person or to discourage a person from doing it. It's not like, if you pay the fine, you can cross the traffic signal. If you are paying the fine, no need to wear the helmet. If you are paying money, you can drive the car rashly and kill a person. So nowhere it is mentioned like that. So how can you say that this money paid, the transaction gets regularized? No, this is just to discourage a person from doing it. So then it will not be treated as consideration, and consequently it will not be taxable. Then the fourth scenario is about an employee not serving the notice period and leaving the employment. Then in that case, what will happen? So again, so this money, whatever is collected, will it regularize the transaction to the employer? No. So why they are levying some charges? Usually notice pay will be withheld. So that will not be given, or any benefits like leave travel concession benefits or paid leaves, etc. will not be released to that person. So the amount will be forfeited. So why this forfeiture will be happening? So this will be because, to discourage the other employees who are in the organization from not doing this kind of activity. So this will not regularize. So it's not like I can pay the money so that I can leave anytime. Not like that. So due to that reason, again, this will also not be treated as consideration, and consequently, it will not be taxable. Okay. And then next one, the fifth scenario that is provided is compensation for not collecting the toll charges. That is, generally, a person who constructs the road is required to get some toll charges. That is, whenever he makes an investment, so he need to recover that investment by way of toll charges. For recovering that investment by way of toll charges, what he will do? So on the vehicles which are plying, he will be recovering. Now what has happened? They did not collect toll charges for a particular period. So for that period, so what has happened, as they could not collect the toll charges because of some contingency in that road, etc., government order something. So now government has given that money to the person, that is that builder. So now will it be treated? This is like a compensation for not collecting the toll charges. Will it be treated as consideration? Yes, because it is to regularize the transactions. So this is not merely to compensate the loss, it is to regularize the transaction. It is as good as consideration received from another person. So that will be treated as consideration and it will be taxable. So it is not like an ancillary activity. This is like money received as good as from another person. That's how it should be treated. Then the next scenario is about late payment, surcharge or fees. So this late payment charges, surcharges or fees, whatever it is, it's like, treated as ancillary supply and depends upon the principal supply. These are treated as consideration because it will arise out of the contract, and clearly it will be mentioned that if you do this, I will be collecting some amount. So this is not to discourage a person, because the people will understand that in the normal course, for example, electricity bill, if you pay late, this much charges you need to pay, like that. So in the normal course, they will be knowing that. So usually some people will do these activities. So therefore, in commercial terms, they will be specifying it in the contract. For that, if any amount collected, that is consideration. And again, its taxability depends upon principal supply. The previous example what I gave you, electricity. Electricity, first of all, will be exempted. So for that, if they collect any charges, even that is also exempted, like that. Okay. Then, so therefore, whenever the principal supply is taxable, the ancillary supply in the nature of money collected for non-performance or breach, etc., that will also be taxable. Then the next situation is related to cancellation charges. Cancellation charges which are collected by the railways, if you take. So again, so already we discussed that example. If this principal supply, that is normal, if the normal thing, that is if the reservation class, so in that first class ticket or any AC ticket, if that is cancelled, so that cancellation charges is also taxable. Suppose if this is a normal sleeper ticket, for that cancellation charges will be exempted, but yes, that will be treated as consideration. Then next thing is about amount forfeited in case of non-refundable ticket. For example, it so happens that you book a air ticket and you did not travel, and cancellation also is not possible. Now that money forfeited, they did not provide you the supply, but actually here what has happened is that, so you booked the ticket, so they could not provide that seat to any other person. So therefore, even though these charges which are collected, but these charges will be taxable. Why? Because, so if they have provided the service to any other person, so they would have paid GST. Na? So in that logic, so whatever money that is collected, so retained, forfeited, so will be coming under taxability. It will be chargeable to GST. Then the last situation is about forfeiture of advances. Usually when you see a property, you will pay some advance to that property. And now you are not buying that property. So because of that, they will forfeit the advance. Now, in the case when they forfeit the advance, so now will it be treated as consideration? No. So, because it is as good as, so compensation received for any loss or injury or damage, because there is no supply that is involved in that case. They are not selling the immobile property and all. So therefore, that forfeiture of earnest money for breach of an agreement, so will be coming under mere flow of money, first case. So to compensate the loss or damage or injury, that will not be treated as consideration. There are no amendments in composition scheme segment. So now we are moving on to registration. In this registration chapter, so there is one automatic revocation of suspension that has been provided. What is this automatic revocation of suspension? First, usually there are some cases where department can initiate cancellation of registration. When department initiates cancellation of registration, what is the first step? The first step is that they will be giving a show cause notice for cancellation. And after giving the show cause notice for cancellation, maybe any reason for on account of non-filing of returns or any reason, but here what we are trying to understand is on account of non-filing of returns. And what happens? First, there will be suspension initiated. So the second step is initiation of suspension. Now, till the time they do the cancellation proceeding. So in the cancellation, what will happen? Cancellation proceeding, outcome of the cancellation proceeding is what? Either they may give a cancellation order or they may drop the show cause notice, correct? Either they may give cancellation order or they may drop the show cause notice. That is the cancellation proceeding. So from the time when there is suspension till the cancellation proceeding, there is a time period. In the time period, if you file the returns, so you have got the notice because of not filing the returns. So because of that only the initiated cancellation. Now during the period of suspension, if you file the returns, then there will be automatic revocation of suspension. So that point has been specified. The next amendment in registration chapter is related to situations that leads to cancellation of registration. Already there were some 5 situations where proper officer suo motu can initiate cancellation of registration. What were those 5 situations? Number 1, if registration has been obtained by fraud. Number 2, you have got the registration voluntarily but not commenced business within 6 months. Or number 3, contravention of provisions of the act or rules. And next 2 more is related to non-filing of returns. You are under composition scheme and you did not file 3 consecutive returns, and you are under normal scheme and you have not filed 6 consecutive returns. That's how it was. Now these last 2 points were omitted. So these 2 points were omitted. In that place, they have brought in a new point. What is that? It says you are under composition scheme. You are required to file an annual return. What is the time limit by which annual return needs to be filed? By 30th April of the succeeding financial year. So within 3 months after the due date, if you are not filing the annual return, then they can initiate cancellation of registration. So previously it was you are under composition scheme, not filed 3 consecutive returns, but now that has been changed to, so not filed annual return within 3 months from the due date, then it will lead to cancellation of registration. So that is one point. Then yet another point is normal scheme, you are not filing returns. So here they have modified little bit and they are telling, so depending upon the period as may be prescribed, not file returns for a prescribed period. Accordingly in rules, they have given the period prescribed as, if you are under QRMP, quarterly return monthly payment scheme, continuous 2 quarters. Continuous 2 quarters if you are not filing return. If you are not under QRMP for a continuous period of 6 months, if you are not filing returns, then in that case they can initiate cancellation of registration. So the last 2 points are, so a person who is required to file returns under composition scheme not filed within 3 months after the due date, and a person who is required to file normal returns not file returns consecutively for 2 quarters or 6 months as the case may be. In these 5 cases, proper officer can initiate cancellation of registration. Have a look into these illustrations. Zen Solutions Private Limited, registered in Tamil Nadu, opted for composition scheme for the financial year 22-23, and they are required to file annual return in GSTR 4 by 30th April 2023, because next financial year by 30th is the due date of filing GSTR 4. If they are not filing GSTR 4 by 31st July within 3 months, so May, June, July, then their registration is subject to cancellation by the proper officer. Same way, another company, Apex Private Limited, registered in Karnataka, opted for QRMP scheme, has not filed returns, that is GSTR 3B, for the quarter July to September 2023. And what is the due date for that? Say 22nd October 2023. And next quarter, October to December, the due date is 22nd Jan 2024. Suppose if the returns are not filed, then after 22nd Jan 2024, they can initiate cancellation of registration. They will wait till the time due date. So 2 consecutive quarters, so returns were not filed. So then also they can initiate cancellation of registration. Yet another case, Patrick LLP, registered in Kerala, opted for monthly filing of returns and has not filed returns from June 2022 to November 2022. So, for November 2022, the due date is what? 20th December 2022. After 20th December 2022, they will initiate cancellation of registration because returns were not filed for a consecutive period of 6 months. Payment process. In this segment, we have one major amendment, that is interest. So, interest under section 50. So, interest on account of delay in payment of tax, that is short payment of tax or non-payment of tax. And now, section 50 subsection 3 has been completely revamped, and in section 50 subsection 3, they have provided for wrong availment and wrong utilization of ITC. So, now when interest under section 50 will be applicable? Interest under section 50 is now applicable in two cases. So, number one, on account of delay in payment of tax, either non-payment or short payment. Second, on account of wrong availment and wrong utilization of ITC. Now, what is the rate of interest that is applicable? So, in section 50 subsection 3, that is on account of wrong availment and wrong utilization of ITC, even though the law provided for 24% per annum, but the words that are used in the law is for an amount, for a rate not exceeding 24% per annum. So, you can see here subsection 3 which says, where input tax credit has been wrongly availed and utilized by the registered person, shall pay an interest on such ITC wrongly availed and utilized at such rate not exceeding 24% as may be notified, even though it is given as 24%, but as may be notified by the government on the recommendations of the council. Accordingly, in Finance Act 2022, in 6th schedule, it has been provided that the applicable rate of interest is 18%. So, due to that reason, so we take 18% only in all these cases. Okay. Now, so in case of delay in payment of tax, how interest needs to be computed? So, interest needs to be computed, so based on the date after the due date till the actual date of payment, the interest period is computed, and whether it should be computed on net liability or on gross liability. So, this confusion was even clarified in the last year itself, and therefore, for May 22 and November 22, we learned that provision only. So, that is situation number 1, GSTR 3B has been filed late. Now, in that case, whether we need to compute interest on the gross liability or on the net liability? On the net liability. What is the logic here? Because had you filed GSTR 3B on time, you would have paid net liability only. Suppose if you are delaying it and filing, then also you need to pay only on the net liability. That is, that amount which is payable using the cash ledger. For example, if the GSTR 3B liability is 50 lakhs, in that 50 lakhs, we have input tax credit balance of 30 lakhs and remaining 20 lakhs is payable using the cash ledger. Then in that case, for delay in filing GSTR 3B, interest needs to be computed only on 20 lakhs, but not on the entire 50 lakhs. That is the first situation. The second situation on account of delay in payment is that whenever we are required to report some liability in 3B and pay that liability, we are not doing it. Say, we have to pay 3 lakhs for an invoice, but that invoice is not mentioned in GSTR 3B. But that month we filed the GSTR 3B. Now, this invoice we will add at a later point of time and we will pay it either on account of demand and recovery under section 73 or 74 or on account of any reason. So, then in that case, this liability should have been paid for a month, but you did not pay for that month. Now, you are paying it late. When you are paying it late, can I pay it using both credit ledger and cash ledger? Yes. So, this 3 lakhs I can pay using credit ledger as well as cash ledger. Now, in that case, say 2 lakhs is paid using credit ledger and 1 lakh is paid using cash ledger at a later point of time. Now, interest needs to be computed not on that money which is paid using cash ledger, but on the total amount of 3 lakhs. So, that's where these two situations differ. Now, there is a third situation, that is where section 53 has been provided, that is whenever we have wrongly availed ITZ, whenever we have wrongly availed ITZ and that wrongly availed ITZ is utilized for payment of liability. Now, interest is applicable on that portion of ITZ which is utilized, not on which is availed, but on which that portion which is being utilized, on that only interest will be applicable. These are the three situations now we have with respect to interest under section 50. So, now related to this third situation, what is the manner in which we can understand as to when it is wrongly utilized? For that purpose, they have given one new rule, that is rule 88B has been provided. What does rule 88B says? So, let's try to understand here. You can see this third one, 88B sub rule 3, in case where the interest is payable on the amount of input tax credit wrongly availed and wrongly utilized. In accordance with 50 subsection 3, the interest shall be calculated on the amount of input tax credit wrongly availed and utilized for the period starting from the date of utilization of such wrongly availed ITZ, date of utilization till the date of reversal of such credit or payment. From the date of utilization till the date of reversal or payment. What is considered as the date of reversal or date of payment? It is simple. So, for whichever month we file 3B, so in which we are doing the reversal or payment, that will be taken as the 3B filing date will be taken. And what will be taken as the date of utilization? For that purpose also they gave an explanation in the rule. So, in that explanation, so the date of utilization of ITZ, the date of utilization of ITZ shall be taken as the date on which return is due to be furnished under 39, means due date of GSTR 3B of the month in which it is utilized, or actual date of filing GSTR 3B, whichever is earlier should be taken. Due date of filing GSTR 3B or actual date of filing GSTR 3B of the month in which that ITZ is utilized should be taken as the date of utilization, and therefore, suppose if it is reversal, it is simple, the date on which we file the GSTR 3B of the month in which we are reversing the ITZ or we are making the payment of that wrongly utilized ITZ. Now, what is taken as the wrongly utilized ITZ? That wrongly utilized ITZ means what? How do we know that ITZ has been wrongly utilized? For that amazing explanation has been provided. So, they are little sensible here, that is, input tax credit wrongly availed shall be construed to have been utilized when the balance in the electronic credit ledger falls below the amount of ITZ wrongly availed. So, now we need to understand as to what is the meaning of wrongly utilized. Wrongly utilized means first you have wrongly availed the ITZ. That wrongly availed ITZ, so the balance will fall below. Say for example, month 1 we have wrongly availed ITZ to the extent of 2 lakhs and the correct ITZ is 1 lakh. So, therefore, total ITZ availed is 3 lakhs. And we have used wrongly availed 2 lakhs and correctly availed 1 lakh, total 3 lakhs. And we used 50,000. So, what is the balance? 2,50,000. Whether the wrongly availed ITZ 2 lakhs falls below? No, because the balance is 2,50,000 rupees. So, there is no issue. That is the first case. So, wrongly availed ITZ 2 lakhs, correctly availed ITZ 1 lakh and utilized 50,000. So, what is the balance that is there? 2,50,000. So, whether the balance has fallen below the wrongly availed ITZ? No. So, we have not used the wrongly availed ITZ in this month. Now, month 2. Month 2, so we have not availed any ITZ. Already there is an opening balance of 2,50,000 rupees. Now, we have correctly availed 1 lakh, no wrongly availed, correctly availed 1 lakh. Already opening balance 2,50,000 is there, correctly availed 1 lakh is there, 3,50,000 and we have used 1,50,000. So, 1,50,000 when we use, what is the balance? 2 lakhs. Whether the wrongly availed ITZ 2 lakhs has fallen below this in the balance, whether the balance has fallen below the wrongly availed ITZ? No. So not utilized in the month 2 also. Month 3, in month 3, the opening balance is 2 lakhs. Month 3, the opening balance is 2 lakhs. And month 3, they have availed the correct ITC 50,000. They have correctly availed 50,000. So 2 lakh plus 50,000, and they have utilized 1 lakh 50,000. So therefore, what is the balance now? 1 lakh. 2 lakhs plus 50,000, they utilize 1 lakh 50. So therefore, what is the balance? 1 lakh. Whether the balance has fallen below the wrongly availed ITC? Yes. Wrongly availed ITC how much? 2 lakhs. So the balance has come down below 2 lakhs. To what extent? 1 lakh. So that 1 lakh is only called as the wrongly utilized ITC. So now that month in which, that is the third month, how much is wrongly utilized ITC? 1 lakh. And down that 1 lakh only interest will be computed. That too from when? For month 3, we will be filing one GSTR 3B. Either due date of GSTR 3B or actual date of GSTR 3B, whichever is earlier, will be taken as the starting date for computation of interest. Then, now we are reversing the ITC. Say in month 6, we are reversing the ITC. So now in that case, so we need to compute interest only on 1 lakh. Why we need to compute interest only on 1 lakh? Because we used only 1 lakh. We have not used entirely 2 lakhs. So that's how they have given the explanation here. So have a look into this explanation again. Input tax credit wrongly availed shall be construed to have been utilized when the balance in the credit ledger falls below the amount of ITC wrongly availed, and the extent of such utilization shall be the amount by which the balance in the electronic credit ledger falls below the credit wrongly availed. To what extent it has come down, that much only will be taken as the wrongly utilized ITC. So this is how we need to understand as to when it is wrongly utilized. Now, what are the 3 situations that are covered under section 50? Situation number 1, that is interest on account of delay in filing 3B. Situation number 2, interest on account of late payment of taxes. Then situation number 3, interest on account of wrong availment and wrong utilization of ITC. Now in these 3 situations, what is the rate of interest? 18% per annum. And in the first situation, interest is computed on net liability. And situation number 2, interest is computed on gross liability. And situation 3, interest is computed on only wrongly utilized ITC. Then next one is that what is the period for which interest is computed? In situation 1, situation 2, it is common. What is that? So it is from the first date after due date, that is after the due date till the date of payment. Whereas in situation 3, interest will be computed from the date of utilization till the date of reversal. What is taken as the date of utilization? Date of utilization is taken as the actual date of actual date of filing 3B or due date of filing 3B, whichever is earlier, and date of utilization, date of reversal, date of utilization till the date of reversal. So date of reversal will be taken as the date in which the month 3B has been filed for reversal or payment of ITC. So this is the snapshot with respect to interest computation. Now let's see some illustrations on computation of interest. Illustration number 1, gross liability for July 2020 is 8 lakhs and ITC availed in that month is 3 lakhs, and therefore the net liability is 5 lakhs, and that 5 lakhs has been deposited in electronic cash ledger as on the due date of filing GSTR 3B, that is 20th August. But the mistake what this person did is that he did not file the 3B, he just deposited that 5 lakhs into his cash ledger, but he filed the 3B for all these 3 months on 28/12/2020. So even though he deposited the money into the cash ledger, whether interest will be applicable? Yes, interest will be applicable, because what is considered as the date of payment? The date on which 3B is filed is only considered as the date of payment, but not the date on which he deposits money into the cash ledger. So due to that reason, so interest is applicable in this case, but interest is computed only on the net liability, because this is on account of delay in filing 3B. So therefore interest is computed on net liability. So net liability is what? 5 lakhs. So interest is computed only on 5 lakhs. From when to when interest will be computed? So interest will be computed on 5 lakhs from the first date after due date, that is from 21st August till the date of payment. What is the date of payment? Say for 3B, he filed on, for the above months, he filed on 28/12, means that is taken as the date of payment. So till 28/12 it will be computed. So therefore the period for which interest is computed is 130 days, and for 130 days 5 lakhs into 18% into 130 divided by 365. So therefore 32,055 will be taken as the interest payable with respect to this July month liability. Then second, for the month of August also, if you see, 4 lakhs is the liability, ITC availed 1 lakh, the difference is 3 lakhs, he deposited that 3 lakhs, how already 5 lakhs is there, he deposited 3 lakhs, so that comes to 8 lakhs on 29. But even then, interest will be applicable starting from 21/9 till the date of payment, that is till 28/12, that is 99 days. For this 99 days, interest will be computed. Same way, third scenario, that is GSTR 3B of September 20. So gross liability 6 lakhs, ITC availed is 4 lakhs. So the difference is 2 lakhs. That 2 lakhs is deposited on 2010. So the balance came to 10 lakhs. Again on this 2 lakhs, interest needs to be computed at 18% per annum. So from which date? From the date of, from the first date after due date, that is 21st November 2020 till the date of payment, that is 28/12/2020, 69 days. For the 69 days, it comes to 6,805 rupees. Then second illustration, PQR Limited have filed their GSTR 3B return for the month of August 2022 within the due date, that is 29/22. It was noticed in October that tax dues for the month of August have been short paid by 10,000 rupees. So there is a short payment of 10,000 rupees. That shortfall of 10,000 was paid through cash ledger and credit ledger, 7,500 and 2,500 while filing 3B of October 2022, which was filed on 20/11/2022. Examine and compute the interest, if any, under the CGST Act 2017. Now, this is, we have to pay liability for a particular month, and we did not pay it for August month, but we paid at a later point of time in GSTR 3B of October, which was filed on 20th November. Now, on entire amount, on the gross amount, this is the second situation, on entire amount, interest will be computed. So here interest will be computed on 10,000 rupees, not on that amount which is paid through cash ledger on entire 10,000. From when? So this pertains to which month? August month. So for August month, what is the due date? So 20th of August, 20th of September. So from 21st September till the date of payment, that is 20 November. So for the 61 days, it will be computed. So therefore, that comes to 301 rupees as the interest in this case. Then second situation is that what will be your answer if GSTR 3B for the month of August has been filed belatedly on 2011? Now in that case, on this 10,000 rupees, interest will be payable not on entire 10,000, only on that portion which is paid using the cash ledger, because there is a delay in filing 3B. So therefore, how much is paid using cash ledger? Paid through cash ledger and credit ledger, 7,500, 2,500. Only on 7,500 interest will be computed. So same way, 7,500 into 18% into 61 divided by 365. So that's how the interest will be computed in this case. So that will come to 226 rupees. Let's see the third illustration. Mukund traders registered in Gujarat have opted to file returns on a monthly basis, and for all the months they file GSTR 3B on 18th of the month following every month. For the month of October 2022, they have wrongly availed 1,50,000 rupees and reversed the same in January 2023. So when they have wrongly availed in the month of October 2022, they have wrongly availed and reverse the same in Jan 2023. Their tax consultant is of the view that interest is not payable on account of Finance Act 2022 amendment. You are required to compute interest payable, if any, based on the following information. So we have got the information here. First, September month, if you see September 2022, because so here they have given, so on a monthly basis for the month, they file GSTR 3B on 18th of the month following every month for the month of October. So they have given some September data also. September opening balance of ITC 3 lakhs, ITC availed 2 lakhs, ITC utilized this for payment of liability 4 lakhs, still there is a balance of 1 lakh. October month 1 lakh and 5 lakhs is the ITC availed. In that 5 lakh there is a wrongly availed ITC. So this 1,50,000 is present in this 5 lakhs, okay, and they are utilizing it for payment of liability, the balance. Now, see September month, October month, what is the balance? 3 lakhs, 3 lakhs. What is the wrongly availed ITC? 1,50,000. Whether the balance has fallen below 1,50,000 in the month of October? No. Again, November month, 3 lakhs, ITC availed, ITC utilized for payment 4 lakhs and closing balance is 1 lakh. Whether the balance has fallen below the wrongly availed ITC? Yes. To what extent? To the extent of 50,000 rupees. To the extent of 50,000 ITC utilized. In which month wrongly availed ITC is utilized to the extent of 50,000? In which month? In the month of November 2022. Then again December, 1 lakh and 2,50,000, 1,50,000 utilized, so 2 lakhs, and thereafter January, whether the balance has fallen below? No. And January 2023, 2 lakhs and ITC availed 1 lakh, ITC utilized for payment 3 lakh. In the 3 lakh, 1,50,000 wrongly availed has been used, like reversed. So therefore, ITC balance has become 0. Now, what is the date of utilization? It is November 2022 is the month in which it is utilized. And what is the month in which it is reversed? Jan 2023. Now, interest period will start from when? Interest period will start from the date of utilization. What is the date of utilization? The date of utilization is the due date or actual date, whichever is earlier should be taken. So, what is the due date? For November 22, the due date is 20th December. But what is the actual date? Here usually they file by 18th of the month following every month. So therefore we will take 18th December, 18th December till the date of reversal. What is the date of reversal? January. For January they will file 3B. When that will be filed? So 18th December, 18th February. 18th December 2022 to 18th February 2023. We need to compute the interest for this period. And that interest will be at what rate? 18% per annum. You can see the answer here. So, interest will be computed from 18 December 2022 to 18 February 2023, that is 62 days on 50,000 rupees only, because to that extent only it is wrongly utilized. So, 50,000 into 18% into 62 by 365. So, 1,529 will be taken as the interest. So, what we need to write first? First, as per section 50 subsection 3, read with rule 88B of CGST rules, interest on account of wrong availment and utilization is payable at 18% per annum. Then, ITC shall be considered to be wrongly availed and utilized if the balance in electronic credit ledger falls below wrongly availed ITC of 1,50,000. Also, the wrongly availed and utilized ITC is the extent to which such balance falls below 1,50,000. Therefore, in the present case, in November 22, the balance falls below 1,50,000 to the extent of 50,000 and interest is payable on that. Then, what is taken as the date on which it is wrongly utilized? That is interest computed from 18 December being actual date or due date, whichever is earlier, till the date it is reversed. So, this is how we need to present the answer. I am pretty much sure that this question will definitely be tested for May 23 exam, because I am sure, like last attempt also I said, for November 22 exam, one question on section 129 will come, that is related to penalty, and it came. For November 22 exam, it came for 5 marks. So, I am pretty much sure this interest computation question will be definitely tested for May 23 exam. I am sure about it, because this is one big amendment. So, definitely that can be tested for May 23, and this is how the illustration you need to answer. One more illustration on this wrong availment and utilization. GSTR 3B for July 2022 filed on 12th August 2022, where gross liability is 12 lakhs and ITC is 18 lakhs. Wrongly availed ITC of 2,50,000 during July reversed in GSTR 3B of December, and there are no transactions during August 2022 to November 2022, which means, so they have availed and they are reversing. There are no transactions during the period August 2022 to November 22, which means they will not be utilizing at all. That is, July, there is no opening balance. they availed 18 lakhs. In that 18 lakhs, wrongly availed is 2 lakh 50 and they used for payment of liability 12 lakhs. So what is the closing balance? 6 lakhs. Whether the wrongly availed ITZ no has been utilized? No. Why it is not utilized? What is the wrongly availed ITZ? 2 lakh 50. What is the closing balance? 6 lakhs. Whether the balance 6 lakhs has come below 2 lakh 50? No. So it is not utilized. Again, the next transaction is in December. In December, what they are doing? They are reversing. Opening balance 6 lakhs and they are reversing the wrongly availed ITC 2 lakh 50, closing balance 3 lakh 50, which means that they have not utilized at all. When they have not utilized at all, so why interest will be applicable? Interest will not be applicable in this case, because only when the wrongly availed ITC, if utilized, then only interest is payable. Next illustration 5. So in similar line to illustration number 4, what will be your answer if the wrongly availed ITC is 8 lakhs? Now, for the month of July, total ITC availed 18 lakhs. In that wrongly availed ITC is 8 lakhs. Now, utilized for payment of liability 12 lakhs. So, closing balance 6 lakhs. Now, whether the closing balance of ITC falls below the wrongly availed ITC? Yes. To what extent? 2 lakhs. So, therefore, what is the wrongly utilized ITC? 2 lakhs. For which month? For the month of July. So, for July month, so we need to calculate the interest from the date when return is filed for July month till the date of reversal, that is for December month. And what is the due date of GSTR 3B of July month? That is 20th August. And here, so we are taking as 20th August. Okay. Suppose if the actual date of filing is given, so that we will take. Okay. So, if it is given, so actually in the previous question it is given as 12th August. So, then we will count from 12th August. Suppose if it is not given, then we will count it from 20th August till the actual date of, no, actual date is not given. So, till the date of reversal. What is the date of reversal? For December 22, when we will file? So, 20th January. So, till 20th January 2023, interest will be computed only on 2 lakhs at the rate of 18%. That is on the ITC that is wrongly utilized, but not on the ITC that is wrongly availed. Only on that portion which is utilized we need to compute. Okay. And here, so interest is applicable only in case of wrong utilization of ITC. So that clarity we need to have. One more aspect here is that should we count the date? That is when we count 20th, here if you see 20th August to 20th January 2023, whether we need to count 20th August, no need to count 20th August. Why? Because usually we will not count that date, we will count from the next date. So even for normal interest also we will do the same way. So that's why we are doing the same way here. So maybe if ICAI gives any other question answer, so if they say that that date also should be taken, then that date also should be taken. Otherwise usually we will count interest from the next day only. So therefore we will count it here from 21st August. So even though it is given this way, but usually we will count it from 21st August. That's how it will be computed. Let's see the next amendment in payment process segment, that is recredit of erroneous refund claimed on account of zero rated supplies. In case of zero rated supplies, there are two options available to a person. Number one, whenever he makes a zero rated supplies, he can make zero rated supply without payment of tax and get the refund of unutilized ITC. The second option is refund upon payment of IGST, that is export zero rated supplies upon payment of IGST, and so much of the IGST paid he can get it as a refund. In these two cases, if he is getting erroneous refund, he is not supposed to get the refund, he gets the refund. Now that refund he is getting from the credit ledger. So that is refund of unutilized ITC. He will be given as a refund. Now that ITC balance will come down, and to that extent he will be getting that as money into his bank account. Now at a later point of time, so department has identified that this refund what he got is erroneous, or he himself identified that during audit or any other activity that this refund whatever he got is erroneous. He should pay back that amount along with interest and penalty. So interest computed from the date he got the refund till the time he is paying back the refund, and the penalty. So we have, if the demand is initiated under 73-74, that penalty, or the general penalty as the case may be. If he makes the payment of that penalty, then in that case, whatever refund that he has got, he is paying back. So that amount will go to the electronic credit ledger as a recredit. So first in electronic credit ledger on the credit side, so there is some ITC balance. The moment he claim refund, that makes a debit to the electronic credit ledger. Now he is returning that refund, so that amount will go as a recredit to the electronic credit ledger. So that's how it will work. And for that purpose, what is the order that will be passed by the officer for recredit into electronic credit ledger? That order is in PMT 3A. PMT 3 capital A. A new form has been introduced in payment process. Form GST PMT 3A is that new form. So in this form, so there will be payment, that is recredit order, that will be done after making the payment. And what is the procedure for that? So for that, they have specified that the payment should be made through DRC3. As it is a voluntary payment, the payment should be made in DRC3. So in the DRC3, the reason, so the moment we look into DRC3, so we need to select the reason for payment. Okay. So in that reason for payment, it should be cause of payment. So how to access this DRC3? So once you log into the portal, so in dashboard under services, user service applications, intimation of voluntary payment. In that intimation of voluntary payment, cause of payment. This is the form GST DRC3. So here, so what is the cause of payment and under which section? What is the date, financial year? How much is the amount of tax, interest and penalty that is payable? So once we complete this payment, what will happen? So thereupon proper officer will be passing a recredit order. That recredit order will be passed in, so PMT 3 capital A. But till the time this functionality is enabled in the portal, so they have given a circular. What is that circular says? Till the time this automatic functionality is enabled, a taxpayer has to make a return request. Once the payment is made in DRC3, so a return request has to be given, because at present in DRC3, in the cause of payment, we don't have this option. So we need to select others and we need to make the payment and we need to give a return request in annexure A given in the circular, that so we are making the payment because of erroneous refund, etc. So then the proper officer will pass an order under PMT 3A for recredit within 30 days from the date of receipt of return request or date of payment in DRC3, whichever is later. So the time limit you need to remember, 30 days from the date of receipt of return request or date of payment in DRC3, complete payment in DRC3, whichever is later within the time limit. So that PMT 3A order will be passed for recredit into electronic credit ledger. The next amendment is the modes of deposit into the electronic cash ledger. So what are the various modes that we already had? So we had net banking, debit card, credit card, and then NEFT, RTGS, then over the counter payment. Now to this list of payments, they have added even UPI and IMPS. So United Payments Interface and Immediate Payment Services, IMPS. So this is also added. So now we have in total 6 modes of deposit into electronic cash ledger. What are those 6 modes? Internet banking, net banking. Number 2, debit card or credit card. Number 3, NEFT, RTGS. Number 4, OTC, over the counter. And over the counter is limited up to 10,000 rupees per tax period. And the next one is UPI and IMPS. So these are the 6 modes of payment into electronic cash ledger. The next amendment is related to PMT 9. So PMT 9 form facilitates transfer of balances in the cash ledger from one cell to another cell. In the electronic cash ledger, we have a 20 cell matrix. We have 4 major heads: CGST, SGST or UTGST, IGST and compensation cess. 4 major heads. Under these 4 major heads, we have 5 minor heads: tax, interest, penalty, fee and others. So now, whenever we make a deposit into the electronic cash ledger through PMT6 challan, we need to mention properly under which minor head of major head we are making the deposit. Say we deposited in certain cells and that gets reflected into electronic cash ledger. Now we have made a wrong deposit. We need to shift the balance from one cell to another cell. So yes, that is possible through PMT9. Form GST PMT9. Using that, we can shift the balances from one cell to another cell in the electronic cash ledger. Now, they have extended the facility of PMT9 even for shifting the balances from electronic cash ledger of one distinct person to electronic cash ledger of another distinct person. So, for example, A Limited is having two companies or two entities. A Limited is having two entities, one in Tamil Nadu and another in Andhra Pradesh. Now, these two are distinct persons of A Limited. Now, in Tamil Nadu, electronic cash ledger, Tamil Nadu GST and electronic cash ledger, there is some balance. Now, that can be shifted to electronic cash ledger of Andhra Pradesh GSTIN, provided whatever liability that is there in Tamil Nadu has been paid. So, for that month, the GSTR 3B has been filed, the liability has been discharged and there is an excess balance that can be shifted to Andhra Pradesh GSTIN. So, how this can be done? Through PMT9. So, now PMT9 has been extended to shift the balances of cash ledger between distinct persons also. Next one is a small amendment. This is related to adding restrictions in section 49. That is, we have two rules, Rule 86A and Rule 86B. Rule 86A says that whatever balance that is there in electronic credit ledger can be suspended by the proper officer for a period of 1 year. So, if the supplier is not in existence or recipient is not in existence or not doing business from the place where they have obtained registration, or invoice, without invoice they have availed ITZ. So, like that some cases 86A there are some restrictions, and 86B also there is a latest restriction that whatever is your liability, that liability 99% only you can pay through credit ledger and 1% has to be paid through cash ledger if your turnover in a month exceeds 50 lakhs. But these two rules ultraviolate the act actually, because nowhere in the act there were restrictions for the purpose of utilization of ITC. So, many writs were filed in the high courts. Due to that reason, now they are making an amendment wide Finance Act 2022 in section 49 itself, wherein in section 49 it is given that the amount available in the electronic credit ledger may be used for making payment towards output tax under this act or IGST Act or SGST Act, subject to such conditions and restrictions. Subject to such conditions was there previously, but now they have added subject to such conditions and restrictions within such time as may be prescribed. So, therefore, now Rule 86A and 86B has got the validity through this amendment in section 49. We have few circulars related to this payment process segment. That is, there were disputes about payment of electronic credit ledger balance for liability, tax liability determined under section 73 and 74. So, whenever a registered person has not paid the tax or short paid the tax or wrongly availed, utilized the ITC or erroneous refund, so department can issue a notice and recover the amount of tax through 73 or 74. These two sections are there. So, upon issuance of notice or demand order, the registered person is required to make the payment of tax. Now, the issue is, can the tax be paid using credit ledger balance? So, for that, CBIC has given a clarification that the balance available in the electronic credit ledger can be used for payment of self-assessed tax in the return or payable as a consequence of any proceeding instituted under the provisions of GST law, which means not necessary that only when you are filing 3B you can use the credit ledger balance for payment of your liability. Even at a later point of time also, whenever the demand order is served upon you, if you have that much of electronic credit ledger balance that can be used for payment of tax under demand, or adjudication order in terms of 73-74. So for that they gave one clarification. And the next issue is whether the balance available in the electronic credit ledger can be used for payment of any liability other than the GST law. So no, so it is any other amount here refers to any other amount under the GST law. So any other amount that is given in section 49 should not be interpreted as any other amount under any law for the time being in force. The balance in the credit ledger can be used only for payment of tax under GST Act. So any GST Act, but it does not mean that it can be used for payment of income tax or it can be used for payment of customs duty, etc. Then the last clarification, which is a well-known clarification, that can we use it for payment of any other amount? No. So here any other amount is given as a prefix to tax. So which means that any other tax. Why they have given any other tax? Which means that, so under SGST tax or IGST tax, for that only we can use. We cannot use it for payment of interest, penalty, fee and others. So that's the clarity given through the circulars. Now we are going to see amendments in the next segment, that is returns under GST. So in this returns segment, there is a big important change that has happened, that is with respect to section 38. So section 38 was previously related to statement of inward supplies. So that was given in GSTR 2. But now because there is no GSTR 2 and GSTR 3, so completely this returns under GST chapter, there are many sections that are omitted and few sections were substituted and some amendments have taken place. Now we are looking into the first section, that is section 37. Section 37 talks about details of outward supplies in GSTR 1. So every registered person is required to give the details of their outward supplies in GSTR 1, and that details will be communicated to the recipient. And now in this section 37, the first subsection, they have just given that subject to such conditions and restrictions, so that if at all GST department wanted to add any restrictions onto this GSTR 1, they can add that. So that's the reason why they have given this. So this is not a great amendment. So just subject to such conditions and restrictions has been added. However, so there is one proviso which was now there in the previous section 37, which is now omitted. So what is that provision? So it says that provided that the registered person shall not be allowed to furnish the details of outward supply during the period from 11th day to 15th day of the succeeding month. So why? What is the due date of filing GSTR 1? The due date of filing GSTR 1 is 11th of the month following every month. So between 11th to 15th, suppose if you miss the 11th deadline, so can you file the details of outward supplies in 12, 13, 14, 15? No, that will not be possible. So that restriction was there. And previously that restriction was given because there were GSTR 2, GSTR 1A, GSTR 3, like that concept. But now that is not there. So therefore this proviso is of not required. So completely this proviso is omitted. So which means now a person, if he misses the deadline of 11th of the month following every month, he can even file the return and 12th, 13th, 14th also, there is no restriction. But what is the disadvantage if a supplier furnishes the GSTR 1 after the due date, that is after 11th? There is a big problem here that if he is filing the GSTR 1 after 11th, then the details will not be reflected in GSTR 2B to the recipient. For example, there is one supplier and that supplier has filed GSTR 1 by 11th of July with respect to June month. Now, these details will be made available to the recipient in GSTR 2B for the month of June. So the recipient for the month of June will get the details of these invoices which were uploaded by the supplier in GSTR 1 filed by 11th. Suppose if the supplier files GSTR 1 after 11th, say 12th, 13th, like that, after 11th if he files, then it will be made available to the recipient not for the month of June, but for the month of July in GSTR 2B of the recipient. Means, so this cannot be availed as ITC by the recipient in the month of June, even though it pertains to June month, but he cannot take ITC in the month of June, he can take ITC only in the month of July. So that is the risk that is involved. So now the recipient should be aware that, he need to ask the supplier, boss, please file your GSTR1 by 11th. Okay, sir, we added the invoices. That is not sufficient. Okay, fine, you added the invoices, which I can see in my GSTR2A. The moment supplier add the invoice in GSTR1 but not file, that we can see in GSTR2A. I don't know how many days GSTR2A is going to be, but yes, respective. At present, we can see that he has added invoices, but that is not just sufficient. So he should ensure that, that is, recipient should ensure that the supplier is also filing the GSTR1 by the due date, then only that comes in 2B. Suppose if the supplier files those in GSTR1 at a later point of time, unnecessarily the recipient has to wait for 1 more month to receive that credit. So the cash flow gets affected. So that's the reason why. So we should be ensuring that the supplier is filing the GSTR1 by the due date. Then, so there is no restriction now that he can file even after 12th, 13th, 14th, any day. Previously that was there and that proviso has been omitted. The next amendment is with respect to section 37 omission, that is, previously, so the detail should be made available to the recipient, and if the recipient is not agreeing to those details, he may accept or reject, like that one concept was there. That is, the moment we file GSTR1 as a supplier, that will be made available to the recipient, and recipient can check that and he can reject the transactions, like that it was there. Now there is nothing like that. So that's why completely that subsection 2 has been omitted. Then they added one new subsection, that is subsection 4. And what does that subsection 4 says? That a registered person shall not be allowed to furnish the details of outward supplies for a tax period if the details of outward supplies for the previous tax period has not been furnished. For example, if for the month of September, GSTR1 is not filed, then for the month of October, GSTR1 cannot be filed. So first file the GSTR1 of September and then only you can file the GSTR1 of the October. So this was by way of rules, but now they have brought in into the section itself. So without filing GSTR1 of the previous month, I cannot file the GSTR1 of the current month. That is the point. However, in cases where the officer, GST officer permits, can we file the GSTR1 of a tax period even without filing the GSTR1 of the previous tax periods? Yes. So that is possible. So that is also given in subsection 4. Provided that government may, on the recommendations of the council by notification, subject to certain conditions and restrictions as may be specified therein, allow a registered person to furnish the details of outward supply even if he has not furnished the details of outward supplies for 1 or more previous periods. So that power is there with the government to notify, but otherwise without filing GSTR1 of the previous month, I cannot file the GSTR1 of the current month. So these are the amendments in section 37. Then the next section is section 38. Section 38 was previously, so communication of details of inward supply, statement of inward supply to the recipient. Now also they have maintained the same heading, communication of details of inward supplies and input tax credit. So this section 38, the old section 38 was completely omitted, and in that place they have added new set of provisions. For the sake of understanding, we are trying to see the bare act of section 38. So in this subsection 1, if you see, the details of outward supply furnished by the registered person under subsection 1 of section 37, that is GSTR1, and such other supplies as may be prescribed, and an auto-generated statement containing the details of input tax credit. What is that auto-generated statement? GSTR2B. So shall be made available electronically to the recipients of such supplies in such form and manner and within such time, subject to such conditions and restrictions as may be prescribed. Accordingly, the relevant form for this purpose is GSTR2B, and this GSTR2B will be made available to the recipient after 13th, okay, after 13th of the month following every month. Why 13th of the month following every month? 13th of the month following every month. Why like that? Because what happens is that, so whenever IFF is required to be filed by the supplier, okay, GSTR1 is by 11th, but under QRMP, GSTR1 will be filed by 13th of the month following every quarter. Moreover, for the first and second month, so IFF, Invoice Furnishing Facility, needs to be filed. So that is optional, of course, but that will be filed by 13th of the month following every month for the first and second month. So that's the reason why now they have made it as 13th. So this GSTR2B will contain the details of input tax credit. And this GSTR2B will have two aspects. One is ITC available and ITC not available. So there will be two aspects in GSTR2B, details of inward supplies in respect of which credit is available, in respect of which credit cannot be availed. So why credit cannot be availed? Maybe even though it is reflected in GSTR1 filed by the supplier, even though it is reflected in GSTR1 filed by the supplier, but ITC may not be available to the recipient. What could be the reason for ITC not available to the recipient? Suppose if the supplier is taking registration, so and immediately within a prescribed period after registration, so that details cannot be made available to the recipient in GSTR2B, but even if the GSTR1 details are filed, but 2B credit is disallowed, newly registered suppliers. So this for the newly registered suppliers. By any registered person who has defaulted in payment of tax and where such default has been continued for such period as may be prescribed. So what is the reason for prescribing this first point? The first point reason is that newly when I register, I will file GSTR1, but I will not be filing GSTR3B. So to discourage the credit that is taken on these suppliers, so that's the reason why they are telling that a newly registered supplier, he mentioned the detail in GSTR1, we will not give it to you. We will give you later whenever he files GSTR3B. So that restriction they wanted to keep. That's why that first point has been given. Second point, if you see that who defaulted in payment of tax. So now it is a very important point that you all should know that can a recipient take ITC as per GSTR2B even though supplier has not paid the tax? Yes, because supplier, the moment supplier files GSTR1, that comes in GSTR2B, but if the supplier has not paid the tax, even though it comes in 2B and you took the ITC, but that may be given as ITC not available. So which means automatically whatever ITC that is not available reflected in GSTR2B will be reversed. So will be deducted from the ITC avail. So therefore, this particular point we should be careful that supplier has not paid the tax. Then recipient, whatever ITC that is reflected in 2B may be disallowed. That is that second point. Then third point, if you see, by any registered person, the output tax payable by whom in accordance with the statement of outward supplies during such period exceeds the output tax paid by him during the said period by such limit as may be prescribed. That is, the liability in GSTR1 is greater than, the liability in 3B. When that will happen? I have added many invoices in GSTR1, but all invoices I did not pay in GSTR3B. So that is what, and normally it so happens, sir. So, okay, permissible limit, within that permissible limit, say 5%, 10%, that is allowed. But beyond that, it will not be allowed. So, beyond that, if it happens, then they can restrict that ITC. Then, next point, what we have, point number 4, by any registered person who during such period as may be prescribed has availed credit of input tax that exceeds the credit that can be availed by him in accordance with clause A by such limit as may be prescribed. What does it mean? Which means that ITC in 3B is greater than ITC in 2B. The ITC that is availed in GSTR 3B is greater than the ITC availed in 2B. That ITC that is reflected in 2B. Now here comes the another important question. What is that? Can I take in 3B more ITC than in 2B? Already we discussed this amendment in input tax credit segment. What is that I told you? The ITC that can be availed by a recipient is matched ITC as per 2B minus blocked credits, ITC with respect to non-business, ITC with respect to exempted, and we need to add GST paid under RCM. So, self-assessed ITC is what we take. So, this self-assessed ITC, so it so happens that GST paid under RCM, so we have taken more. So, then whatever ITC that is reflected in 2B and what is the ITC that is taken in 3B is say more. Okay, within the permissible limit. If it is within the permissible limit, fine. Otherwise, then also the ITC may be restricted. Then the next point, by any registered person who has defaulted in discharging his tax liability in accordance with the provisions of subsection 12 of section 49 and subject to such conditions and restrictions as may be prescribed. Okay, so that is he has not paid say 1% of the liability through electronic cash ledger. So, or any such restrictions which are placed, but he did not follow that restrictions by such other class of persons as may be prescribed. Now, based on that, I just gave you one example. So, let's see before this section 38 how the situation was. Total ITC as per books is 10 lakhs, whereas ITC in 2B filed by the suppliers was 8 lakhs, and in that eligible ITC in the 2B is 6 lakh 50. So, how much ITC we can take? 6 lakh 50 we can take. But now, after amendment, that is not just 6 lakh 50, suppose if that is disallowed. Why? Because supplier is a newly registered person, or supplier has filed their GSTR1 but not filed 3B. So, then take out. The supplier liability in GSTR1 is greater than in 3B. That may also be given as ITC disallowed. Then, supplier has received demand notices and defaulted in payment of taxes and the default continues. Then, supplier has not fulfilled the conditions of Rule 86B. So, like this, whenever there is a restrictions like this, whatever restrictions we have seen, in all these ITC disallowed, the remaining balance 3 lakh 30 that can only be taken. So, here these are all the restrictions that can be put forth by the department. So, even the matched ITC may be disallowed in terms of section 38. Many times I tell in the class that this ITC is like, you know, a hero, mythological hero, Karna. So, in Mahabharata, you would have come across one character by name Karna. So, ITC is like Karna only, because you know many kind of hurdles that Karna will undergo as soon as he is born. So, he will be deserted and he will be sent in the water, in the river by his mother, and he will be growing in someone's home, and thereafter, so when he tried to learn, people will not be willing to teach him because he belongs to the lower caste, and thereafter he will be trying to prove his mettle in the testing phase between Pandavas and Kauravas. There also he will be insulted, and then he will try to learn the whatever that astras, shastras, etc. and from Parshurama, Lord Parshurama, but Parshurama will curse that, you will not be able to remember this because you are not a Brahmin and you lied to me that you are a Brahmin like that. So, therefore, that you will forget. And there are many such curses. After all these hurdles, he will come and stand in the battle. So, even then, Krishna will use his, tricks and he will ensure that he is getting killed. Like that, my money, sir, I wanted to take that as ITC, but see how many restrictions: blocked credit, not available; used for exempted, not available; and section 16 conditions: you should be in possession of tax invoice, your supplier should have paid the tax, you should have filed the return, you should have received the goods. Then again, payment process, certain restrictions are there, like 1% you have to pay by cash ledger fully, you cannot use credit ledger. And suppose if the supplier is not doing business from the place where they have obtained registration, that will be suspended for a period. And now this section 38 restrictions. So this many hurdles I have never seen. And after all these things, the ITC that you take, so see the invoices. The invoices is what? The invoices here is 10 lakhs. But what I get in my hand is 3,30,000. So, this is stupidity. So, from 10 lakhs, total 10 lakhs, what I am getting in my hand is 3,30,000. So, this unfortunate situation, and this is how they are tightening that input tax credit, and I don't feel like what's the point in calling that we are having a system of credit in indirect taxes now in GST, which was a lot of restrictions before. Now also there is restrictions. So, free flow of credit is the motto of the current government, but somewhere, it missed. Okay, that's my pure opinion. So, I'm not talking about politics, I'm talking about the policies here. So, this is something which is not at all correct. Then, the next section in return segment is section 39, that is furnishing of returns. So, mainly in section 39, they are talking about GSTR 5, 5A, then even 3B, all those returns related information is given in section 39. There are few amendments in section 39. In that, the first amendment is that GSTR 5 is a return that will be filed by non-resident taxable person. NRTP, non-resident taxable person, is a person who come from outside India to India and is making supply of goods or services in India and is not having any physical place of business in India, and his coming to India is on an occasional basis, is called as a non-resident taxable person. This non-resident taxable person is required to file a return, monthly return in GSTR 5. And this GSTR 5, before amendment, the time limit was 20th of the month following every month, or 7 days from expiry of registration, whichever is earlier. Now, this 20th has been changed to 13th. So, that is the revised time limit for GSTR 5, 13th of the month following every month, or date on which registration gets expired, plus 7 days, 7 days from expiry of registration, whichever is earlier will be taken. So, what is this expiry of registration? We all know that NRTP will have a temporary registration, and so that registration is for a period up to 90 days, or it can be extended for a further period not exceeding 90 days. So, there is a temporary registration only for them. That's why 7 days from expiry of registration. The next amendment in section 39 is related to, so return which is required to be filed. So, under GSTR 3B, that is section 39 GSTR 3B. So, whether they need to pay the taxes, if they are opting for QRMP, whether they need to pay taxes as per fixed sum method or self-assessment method. So, for that, it was only in the rules, it was not given in the section. So, that's why they have made an amendment in the section itself stating that a person who is opting to pay GST on a monthly basis but filing returns on a quarterly basis, QRMP, may either pay tax as per system calculated, that is fixed sum method, or self-assessment method. So, they have option to choose. And next one is with respect to the time limit for rectification of GSTR 3B and GSTR 1. So, section 37 as well as section 39, both places this amendment is there. So, in similar time limits, we have already discussed this, that so rectification of GSTR 1 as well as rectification of GSTR 3B, now the time limit is what? 30th November of the succeeding financial year, or date of filing annual return, whichever is earlier. Then, next is with respect to few sections like section 42, 43 and 43A, which was talking about matching, reversal and reclaim of ITC, that was related to the earlier return filing process. So, these three sections are omitted, 42, 43 and 43A. These three sections were omitted. Then, yet another amendment in section 47, late fee. So, already late fee has been completely revamped, which was an amendment for the previous exam, November 22 exam itself. Now, what they are telling is that the late fee, there was a confusion. For GSTR 8, they have not given any late fee in the law. That's why this section 47 has been amended to incorporate the late fee even for GSTR 8. What is GSTR 8? A return which will be filed by a TCS deductor, e-commerce operator. So, what is a late fee for that? 100 rupees per day subject to maximum 5,000. So that late fee is now prescribed even for GSTR 8. That is one small amendment. Then to whom annual return is now applicable. Annual return is required to be filed in GSTR 9 or 9B by any registered person whose aggregate turnover exceeds 2 crores. So this they were continuing from 2017-18, from 2017-18, 18-19, 19-20, 20-21. Now latest for 21-22 also they have given a notification stating that if annual aggregate turnover in a financial year exceeds 2 crores, then only you are required to file annual return, otherwise not required. Like that they gave this notification, and future we can expect that forever they may bring this into the section, but right now it is in the form of a notification up to the current financial year 2021-22. Then in GSTR 3B, so in the form they have made some amendments via the notification. The first amendment is that whenever I am making supplies through e-commerce operator, the liability to pay GST is on e-commerce operator under section 9 subsection 5. So there are 4 services which will be supplied through e-commerce operator. There is a supplier, there is a e-commerce operator, and there is a recipient. So what are the 4 services supplied through e-commerce operator? HATE, housekeeping service, accommodation services, transportation by any motor vehicle, and eating food from a restaurant. These 4 services supplied through e-commerce operator, liability to pay GST is on e-commerce operator. Whether the supplier has to declare these outward supplies? Yes. In 3B, the supplier is required to declare these outward supplies. For that, in 3B table 3, they have added one new row stating that any supplies through e-commerce operator under section 9.5 for which liabilities on e-commerce operator should be separately shown there. And one more update in form 3B is that the reversal of ITC. So in ITC table 4 ITC we have, in that they are telling that ITC reversal also includes ITC reversal in terms of rule 38, that is for banking company, financial institution, etc. So what we need to do is that previously we used to take only 50% of the eligible ITC, but now they are telling show full ITC and then you do the reversal of 50%, including blocked credits, etc. Then one new row has been added in table 4D, that is ineligible ITC has been changed to other details. So in that other details, so not only ineligible ITC but any other case. So because place of supply, because we already know that if it is CGST, SGST paid in the other state, we cannot take it as ITC. That information also will be reflected there. But I doubt whether this will be applicable for exam or not, this amendment, because this is a practical amendment related to form GSTR 3B. I doubt whether this will be applicable for exam or not, but as it is there, I have just given. As on the date of release of these amendments videos, ICAI has not released any amendments material. So if ICAI releases any amendments material, so in that case, so those amendments only will be applicable, but usually majority of the amendments, whatever I have compiled, is based on the notifications and circulars, and it is subject to change. If ICAI omits certain amendments, then it will not be applicable. But if they add any amendments, so definitely I will make a video on that and I will be uploading it as to what are all the amendments which ICAI has omitted, so in their amendment book, and what are the new amendments, because so usually new amendments there is no possibility, only existing amendments will be removed. So but new amendments will not be added because I have compiled everything.